Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen. What's in store for us next week? What key technical levers are in play? What are the biases? I'll talk about it in this video, so let's get started. Let's start by looking at the 4-hour chart. If we go back in time and take a look at the things like these lows right through here, these highs right through here, before the market moved sharply to the downside, we returned back to those highs in trading this week. After the U.S. election sent the dollar sharply to the upside, including the dollar versus yen. So we came into that swing area, and that swing area comes between 154.54 and 155.09. It's going to be a key level going forward. Now, the move to the downside subsequently has seen the dollar lose ground with the price moving to test the rising 100 bar moving average on the 4-hour chart, currently at 1.52 or 152.18, and the price, if you recall back earlier in the week, we came down toward that level. Also, this 200-day moving average, we actually moved below both those levels, reaching the low for the week. This is before the election, and then quickly or moved to the upside as the results started to come in with the dollar buying. So this failed break right here, we'll chalk it up to pre-election movements that kind of tilted the bias to the downside. But once the market started to move back above that level, things started to move higher. So as we go into next week, we have a resistance up here near this swing area, and ultimately we're going to need to get above that level if the buyers are to take more control. And on the downside, we have support against the 100 bar moving average and also this 200-day moving average. In between sits this swing area, which goes back in time. Actually, if I take that off and start to look back further, you can see how we had a swing low right here, a swing low right here, a swing low right here, fell below that level and moved to the downside. So this yellow area, the green line, the blue line, that they all come into play as key levels. And if the price is going to go lower, we need to get below all those levels, and then we'll look toward the 50% retracement, the 100-day moving average, 200 bar moving average on the 4-hour chart as targets to get to and through. Conversely, if we do hold this support and we start to move higher, we look toward the 61.8, maybe these swing highs from last week. Then we look toward this swing area up here to give us further clues to the upside, or give us further confirmation to the upside if we break above that level right through there. Now, let's take a look at the hourly chart, because there's some clues here off of the hourly chart price action more recently here. And if we look at the price action and trading here today, we fell below both the 100 and 200 hour moving averages. That's the blue and green lines through here. And we've been able to stay below those levels since then. So in the short term, we could say that we use the 100 and 200 hour moving average as a short-term ceiling. If we stay below that level, then we have the go-ahead to push down toward our 200-day moving average, 50% retracement, 100-day moving average on the downside. If we move above it, then it technically puts the bias more to the upside for the dollar versus yen. So that's my look at that currency pair as we head into the close, as we head into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.